So it's become pretty dull in the markets. We're seeing very small movements. I do hope that will change soon. We didn't get the breakouts, the levels I mentioned yesterday. Everyone's eyes are on the big hole. What hole am I talking about? Of course, the Jackson Hole announcements, the meeting, the big speech. But expectations is going to point out and give you a roadmap for the rest of the year. I hope so. It's not always the case. Sometimes these meetings just go in repetition of what he's already said. So, and then the market tries to read between the lines. So it all depends. But definitely we are looking for something to change. Everything has extended itself in terms of how yields have risen and how markets have corrected. We do have a 2-3 day bounce in the Nasdaq as an early sign that something can change, and similarly in some of the metal stocks here in India that were holding out a bit. You saw the copper prices bounce back for a couple of days. So a lot of hope getting built around that. Fine, we'll be done here, but we haven't seen a proper reversal in the bond yields yet to say that that is past. But yeah, price action looks like it's waiting to break out, but till we get it, we haven't gotten it yet. Now, the broad market has made an all-time high, both the mid and small cap indices. So you have to remember the way this market has worked is rotation. So somebody messaged me on Twitter, aren't you worried about the weekly setup on the mid caps? Is it had become very, very overbought? Yes, if you're looking at RSI at an 80 plus, you will think it's very overbought. But entire bull markets, and say when the tech bubble was going on, remained at a monthly 80 plus RSI for several years and several quarters. Went to 90, then it went to 95, 97. So what kind of a market we are in completely determines how the RSI behaves. You just can't look at a number and say it's done and dusted here, it's gone too far. And in this particular scenario, rotation has played a big role, because when one sector stops moving and pulls back, another one takes over. So that rotation has ensured that the indices broadly don't give back. The large cap indices have, but a much broader index, when you look at the mid cap, or if you look at the Nifty 500, it falls less than the Nifty. And if you look at maybe an all cap index also, it will be slightly different. And the mid cap 100 staying above the averages and not even breaking those despite the recent correction. So you can see that, say for example, now take the auto sector. It's pulled back quite a bit, closed positive last week, so ready to move higher, while there may be other sectors that have still not picked up, like banking, right? So you are seeing that. And similarly, IT held out better in this correction, looks ready to start higher, and it's starting to participate in what has been a very weak market. And then super outperformance by a pharma that doesn't even pull back. So this divergence continues. Now imagine that next week you get a pharma pullback and you end up getting an auto rally. What will be the net impact on the index? So that's it. Get used to it. This is an ongoing run with a lot of rotation, a lot of action in sectors like the PSUs, and it's not over.